Welcome to this lesson. Today, I'll give you 6 tips for investing in cryptocurrency. The individual who wants to position himself on the cryptocurrency market can turn to a specialized online broker who offers virtual currency trading via derivative products such as CFDs. For example, eToro lets you trade Bitcoin, Ethereum, Ripple, Bitcoin Cash, and Cardano. IG allows you to trade Bitcoin, Ethereum, Ripple, and Litecoin. XTB allows trading Bitcoin, Ripple, Bitcoin Cash, Litecoin, and Ethereum. You will also be limited when it comes to leverage. Indeed, a CFD on crypto assets cannot have a leverage effect greater than 2. Remember that 89.4% of retail traders lose money according to the study of the results of retail investors on CFD and Forex trading in France carried out by the Autorite de Marchés Financiers on the basis of the results obtained by nearly 15,000 French retail traders from 2009 to 2013. The AMF also reminds that the financial intermediary who markets this type of CFD must be approved and, as such, appear on REGAFI's registers. Since June 1, 2021, it has been possible to invest on the Paris Stock Exchange in Bitcoin or Ethereum via listed index products. These ETPs, exchange-traded products, financial products relatively close to ETFs, track the evolution of Bitcoin or Ethereum prices. VanEck, 21 Shares, ATC Group, and WisdomTree now offer ETPs on Euronext Paris and other European countries, which allow French retail investors to position themselves relatively easily in the 2 main cryptocurrencies in terms of capitalization. Find our 6 tips for investing successfully and knowingly in a cryptocurrency. 1. Understand blockchain technology well. Before investing in this type of currency, make absolutely sure that you understand this innovation and in particular the technology behind it. This ultimately comes down to fully studying the blockchain technology, from which encrypted currencies are derived. Pay attention also and above all to the details that differentiate the currencies from each other, the programming language, the blockchain validation system, the governance, the ability of the currency to adapt to a change of order of magnitude demand, for example. 2. Take into consideration the token expansion limit. The unit of cryptocurrencies is called token. The number of tokens created can be limited, as is the case with Bitcoin, which will be limited to 21 million Bitcoins in circulation, making the product relatively rare, which of course contributes to its value. But a cryptocurrency can also follow a deflationary pattern. In this case, the quantity of money in circulation is unlimited, which could over time favor the stagnation, or even the reduction, of its price. 3. Check virtual currency transparency. Prefer a cryptocurrency with a website with clearly identified investors and developers, a presentation of the project, possibly a roadmap indicating the planned technological advances. 4. Stay informed on cryptocurrency websites. To be up to date in this ultra-niche and ultra-geek field, and therefore ensure an investment in the best conditions by having all the information on the targeted asset, it is better to seek information where it is, i.e. on the web. Many cryptocurrencies offer their own website, but broaden your research to community websites such as Reddit or Slack, which will allow you to publish, consult articles, discuss and share issues and opinions. The Bitcoin Talk forum fulfills the same role, but is exclusively dedicated to cryptocurrencies, not just Bitcoin, because it has a dedicated altcoin section. 5. Learn about the quality of virtual currency developers and their funding. What makes the success of a cryptocurrency above all is the quality of the developers who are at the origin of this innovation. So check their experience, training, work history, etc. Are they a tight-knit team with good rapport? You can verify that their exchanges on the Slack or Reddit community are both cordial and constructive. Finally, you absolutely must know who pays the developers, a company or a private equity fund outside the cryptocurrency. Are developers paid with their cryptocurrency? The important thing is to be able to assess the motivation of the developers and any conflicts of interest. 6. Limit your investments in these high-risk volatile assets. Volatility is one of the major characteristics of cryptocurrencies. Thus, the value of a cryptocurrency, that is to say its price, can increase or decrease very quickly, in an unpredictable way. In question, its young economy, its unusual nature, and especially its sometimes illiquid markets. And the number of platforms further adds to the lack of liquidity of the tokens. Thus, at the end of 2019, it only takes a volume of 143 bitcoins to vary its price by 1% on the Bitstamp platform. Coinbase and Kraken are much more liquid, and it is respectively 456 and 672 bitcoins that must be exchanged to move the course of the leader of cryptos by 1%, reports the site Les Echos. Investing in cryptocurrency is therefore not recommended for cautious profiles with high risk aversion. For others, remember not to keep a large part of your savings in Bitcoin or others which remain high-risk assets. There is a real risk of losing a large part of the money thus invested. If the adventure of cryptocurrencies tempts you, get started with money that you are ready to lose. It must be an investment representing a very small part of your financial assets. Cryptocurrency is more of an experiment to try if you feel like it than a reasoned investment made with a view to diversification. Wanting to make money quickly is never a reason to invest in cryptocurrency. Thanks for watching and see you on the next one. Bye for now.